going today?
Scott, what's happening? Michael, glad you could be with us today, buddy. How's it going over there?
Oh, everything's going good up here, Jamie. How's everything
Or
down there?
or up there, I should say. Yes, yes. Michael, of course, resides in Canada, so that is technically up there, the great white north, so to speak, for those of you who are really old, like myself. But anyway, Michael, thank you for joining us. Of course, Steve's taking a little well-deserved vacation today with the family. So before we get into the good stuff here, just want to take a moment to make the lawyers sleep well, and just want to make sure everyone in attendance is aware of the fact that all the information that we share with you guys is for educational purposes only. If you do need investment advice, you know, how to save for retirement, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or another licensed individual that can help you out with all of that stuff. Once again, all of our webinars, whether it's this one or the other 8 ones we host throughout the week, for educational purposes only. All right, I know we have a lot of regulars in here, so if you'll bear with me real quick, because we do have some new people that are attending for the first time today. So always want to take an opportunity to make everyone aware, especially the new people. It's not only the award-winning, one-of-a-kind technology that we have, but it's the community that we've built around it. All right, it all started off with Barry's Trading Room right up here in the upper left-hand corner, moderated by Barry Anderson, longtime user of Trade Ideas. Barry was a user before he became part of the TI family a very long time ago. Man, time flies. But Barry does a really great job at moderating a room with 400, 500, 600 people in there. And not only does he do that, but he also showcases his trading techniques while using the Trade Ideas software. So other than Barry, the next best thing about the trading room is the price, which is zero. If you've shopped around trading rooms out there, you know that most of them are not free, not any ones that are any good anyway. So this is one of the added benefits that we bring to the table when you become part of the family here at Trade Ideas. Now, of course, it's Monday today. You get me, you typically get Steve, but Steve's out today. We got Mr. Noss filling in. Steve is going to take the helm tomorrow, though. He'll be back in the saddle for Trade of the Week, which is his usual gig. Andy Linloff rides shotgun with him. We like to change it up just a tad bit in the middle of the week. Good old hump day we bring in on Wednesdays. Dan, the CEO and founder of Trade Ideas, along with Brad Williams, our Chief Technical Officer. Always a good change of pace with those guys. Andy is going to round out the 5 o'clock Eastern webinars with the Trading Studio, and I ride shotgun with him. And then, of course, on Fridays, we change it up completely. Typically, we allocate 3 hours for the Friday support session, which is basically just a free-for-all. Anything Trade Ideas related, come on in there. We'll give it a shot at answering your question, getting you set up with whatever it is that you might need. You get 4 heads in there on Friday. You get myself, Sean, Andy, and Steve. So that starts up at 11 a.m. Come one, come all, anything TI related on Fridays. Now, in addition to our 5 o'clock Eastern webinars, these are the newer ones that we folded in not too long ago. These guys start at noon Eastern, and they're more for the beginners, the new people. Monday is going to be 101, Tuesday 201, Wednesday 301, and then on Thursdays we do 401. I happen to host the 401 Advanced. So we do recommend that you take these in order. You need 401 to get used to, or to have the content to build upon 201, so forth and so on. So unless you've really just immersed yourself in the technology and have a really good understanding, you want to start off at 101 and take them in the proper order. Now, we do a lot of talking about AI in these webinars for good reason, because it's the latest, greatest thing that we've added to the software. And the reason we like to show you this chart is because people are responding well to the AI module. And put an S on that now because it's plural. We used to just have Holly 1.0, which we launched in 2016, and our user base has responded. We've taken on all new highs as far as number of subscribers here at Trade Ideas, and with the advent, or I guess I could say the birth of 2 additional AIs, we're continuing to see this user growth chart head north because people are responding. Now, before we get into today's presentation, I do want to take a minute to urge you, in case you have not done so already, to download this ebook that myself, Sean, Andy, and Steve put together. Well, we put it together probably in this area right here, but here's where we released it, right? Little luck with the release of the book is when we got this little release on the SPY. A little bit of luck involved there, wasn't, intentional, but it does bring up a good point. If you go ahead and familiarize yourself with the content in this book, then when the short opportunities are more prevalent than the longs, you're going to be better prepared than most everybody else out there. Of course, since we are in a market, and I'll just briefly pull the SPY up here, that is starting to flux back and forth from these little high ranges down here to the low range, there are some excellent shorting opportunities that have been presenting themselves right out of this book here. So do yourself a favor. It's free. Just go to trade-ideas.com/ebook. You can download it, save it to your desktop, and it won't take you that long to consume that book. So go ahead and get it done. As Steve, our absent buddy, likes to say, chance favors the prepared mind. All right, so wow, here we are into today's content. And what I will say about today, before we start digging in here, man, not a whole lot of direction one way or the other. Steve is usually in here doing the market recap. I'm not nearly as eloquent when it comes to talking about the markets in general here, but I'll do my best here. Now, what do we have to start the day here? Well, we had a small gap up on the SPY, all right, 31 cents to be exact. We can see, let me just go ahead and shrink this up into 15-minute candles here. All right, so here we are looking at Friday's close right here. We had today's open right here, and that is, unless my math is failing me, 31-cent gap up since Friday's close was 283.16, and we had the open today at 283.47. So a big whopping 31-cent gap up on the SPY today. And kind of interesting what we had in the first hour and a half. So, of course, this is all in retrospect now. When this was happening, nobody really had any clue as to what to expect. But we did have a little bit based on, hey, what neighborhood are we in now in the SPY, right? Remember, the highs are way back here. Last week, boy, we were sure coiling up here for 3 days. Everybody was kind of hoping and thinking that we'd go ahead and take it, run at that high. Just wasn't in the cards, was not in the cards. And then on Friday, not only did we not tempt the high, but we had this little gap down here to this next little area that could be, well, kind of janky support down there, but a little bit more of what we could call support down here. And we didn't quite get all the way down there today, but it gave it a good run. So we did have some weakness. So we did, gyrate up for the first hour and a half, and then whoosh, kind of let the stopper out here. And it wasn't too long before we did fill that gap and head lower, and then bouncing, pretty much not quite down to that little level right there, but pretty darn close to it. Took a little bounce here off the bottom. Everybody, including myself, was thinking, hey, well, we might get back up to the close, but you can see here the SPY ran out of steam, and it didn't quite get back down to the lows, but pretty close. So one thing to point out about this, and this has been keeping with tradition as of late, we're seeing higher volume in the down moves, and we can see that the SPY finished today about 33% more volume than normal. Which, we keep having these up days on lighter volume. The down days are marking heavier volume. Does that necessarily mean anything right now? Well, as Steve would probably say, not until we do some significant technical damage to the charts. And in order to do that, we'd have to really get through these levels and start coming back down to here. Michael, anything to add about just market as a whole? This pretty much just seems to be business as usual right now. Market's trying to find its feet. Maybe we go sideways here for a little bit. What I will add to that is, hey, we can't forget about our friends over in Europe. The IEV continues to remain pretty weak, a little
Hmm.
spotty on the daily here, we can see here. And then, of course, Turkey, 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 and it's not Thanksgiving, ladies and gentlemen. We've got Turkey kind of imploding on us. We can see the Turkey ETF here as well. Kind of on live support today, just went sideways, but not looking very good over here, Michael. So could be a little bit of what's affecting the U.S. markets. What are you thinking over there?
Yeah, for myself on the SPY, I've kind of just drawn a line in the sand at 280.
Mm-hmm.
That was kind of the area that it took us a few months there to break out of to get near highs, and
Right.
so I'm as Brian Shannon always says, I'm innocent until proven guilty on the bull side till we break under 280. And to your point on Turkey and the other financial markets, I've been actually keeping a really close eye on LL or sorry XLF, um,
Right, for the financials.
just
Okay.
our financials, and just to see how they're going to get affected by these foreign market financials.
Mm-hmm.
I just think it's important that we kind of keep an eye. How are we holding up relative to kind of the rest of the world? I know it's very common and popular to kind of everybody throw the baby out with the bathwater when we hear of a financial issue somewhere. But we always need to make sure, okay, well, how is the market thinking that we're being affected here at home? So one of the additions to my screen as of late has just been this XLF chart to try to keep an eye on it and see what's going on.
No, and that's a great idea because like it or not like it, the banks really do kind of call the shots, Um, uh, there's this thing called the Fed, the
Mm-hmm.
mother or father of all banks, I guess we should say. Lord knows it's rife with all kinds of issues. But it really is, and it reminds me of these quotes. I think it was Larry Kudlow or some other economist or commentator on CNBC a few years ago. Isn't it true that we just kind of all live and die by the Fed and the interest rates and the financials? Well, it kind of does seem to be the proverbial canary in the coal mine. So great call on that. I mean, we really are much more tied to the banks than we ever want to admit. That's just my opinion.
Yeah.
The equity markets are affected by that as well. So yes, the XLF kind of right, what,
And
upper three quarters, I guess, or so. So we'll have to keep our eyes on that for sure.
it's I always keep an eye on it personally because I started my trading career around 2008 where the banks kind of dictated everything. It's a little more decoupled now, and I
Mm-hmm.
think we need to keep an eye on the tech sector because the Qs have been leading this charge for a long time. But uh, I think in these moments you need to look for what you think is going to break first. So that's kind of why I'm keeping an eye on the XLF, and I personally believe we hold strong here. Things could be okay going into the future, but I don't know how many more giant, countries or banks or this type of thing are going to come out with any sort of financial problem before this starts to get weighed down as well.
Absolutely, you never know. It seems like there's always some type of contagion. I remember back in the late 90s, it was the Asian contagion with tech. But there's always going to be some foreign country that's currency is in shambles. Sometimes it affects us, sometimes it does not. But um, all we can do is vigilantly monitor it and wait for the correlations or the moves to occur. Take it from there. But definitely good advice there on keeping an eye on the financials, Michael. So let's talk about expectations today. And as far as expectations go, one after the other, I was just kind of sitting here this morning directionless. Was not an easy day to trade. Things that are normally working from my side of the fence anyway weren't working, and we'll get into this in just a second, but it was like all my buy signals from all of my favorite tickers were just real chasey, right? And they seemed to peel off as soon as I got the signals. And then the flip side, on the downside, a lot of my favorite short tickers were the exact opposites. There were these sustained moves down. And you're just like, well, the pattern that I'm looking for here is not present. The longs have went too far, the shorts have went too far, and it was almost like opposite day to day as far as those tickers go. But let's just get into kind of what I was thinking within the first 15 minutes or so here. So, of course, what do I do after the first 15 minutes? I take a look at my big cap compare count window, and this one is looking at any company hitting a high or low in that first 15 minutes with a market cap of 4 billion or higher. So, typically I like to see if there is a bias, which there is most of the time. Every once in a while we'll get a 50-50 reading, 49-51, but not very often. But this is about as pathetic as you can get as far as a bias one way or the other. 53% green. And generally my rule of thumb is unless I see something 55% or higher, then I just pretty much have to think to myself, anything goes here. There's going to be some good shorts, some good longs. One thing that I will take to the bank when I see these sub 55 biases here is, well, probably not going to be the best day for continuations, right? For continuations, for things to keep going after that first little juicy signal, we typically need to see these things above 55, hopefully approaching 60, but we haven't seen a whole lot of those days as of late. But when you do see those strong compare count days in the future, might be to the upside or the downside, well, then you'll know that anything above 55, approaching 60, those are going to be more probable for follow through. Anything below 55, once again, anything goes, but might not be a lot of follow through as a whole. That's not to say some things won't, but I'm just talking in general terms here, majority, whatnot. So anything goes after the first 15 minutes, then let's just kind of take a peek at what we did here, right? So for the first 1, 2, 3, 4, it took about an hour and a half before we capitulated here. So anything goes. Well, I wanted to bring up this tweet today by Brett Steenbarger, who is actually going to be at our summit, Michael. He's going to be one of our keynote speakers. Dr. Brett is a psychologist. If any of you watch the, I think it's Showtime series, Billions, about the hedge fund dude, well, you know that they have a in-house psychologist, right? The big hedge funds, they have got a resident psychologist. When the traders start having issues or underperforming, they go talk to the resident shrink. And of course, in the series, it's a woman. She gets them all straightened out. But of course, that's fantasy world. Well, Dr. Brett is actually a real psychologist who counsels traders, right? Hedge funds, the whole gambit, right? So if you can make it to San Diego for our summit, be a good thing to see. But I wanted to point this out. This was a tweet he made not too long ago, sometime last week. Patience is also a form of action. And boy, that really resonated in my ears this morning after I'm sitting here in the first 30 minutes trying to figure out what to do. And finally, I came to the decision of what to do. And what was the decision? You know what? If you're unsure, do nothing until something jumps out at you. And it took a little while before something jumped out. And I'll go into detail about what that was here in a little bit. But I just wanted to share this with you guys because, wow, patience is also a form of action. And of course, there are many other forms of this quote, right? But this one just kind of stuck out. Yep, patience is also a form of action. So after Jamie sees his compare counts and sees the market running up, what I also noticed is, number one, this is where I like to get a lot of my trades, especially right off the bat. So this is my turbo up family, no resistance, looking for stocks hitting highs. One of the added benefits of these guys, if we just take one of these at random here, is you'll notice when they're triggering, they have to be hitting all-time highs. But of course, this was kind of the same old song and dance for these guys today. Boom, they busted out. Then you can see that wick right back down. So they didn't stay above here for very long. So on the intraday, when I'm trying to find nice consolidations and I'm typically looking at the 5-minute time frame here because, well, the market's only been open a short time. I need some candles out there to give me some guidance. Now, what I'm looking for are things that have been going kind of sideways, right? Well, Vive is a perfect example. You know, when I'm pulling these things up this morning, they're all just going on big rips. You know, not really something that you want to just jump into right after the market opens. Amazon, another one. So the reason I'm showing you these, and there's Apple, of course, doing the same thing. See how just right out of the gates here, they ran with the market. But by the time I start getting signals, look here, they're at the top, right? So there's no nice consolidation. In other words, this is the ticker that provides me with the pattern that I like a lot of the time, but today the patterns just weren't there. You know, they were too stretched out. Now the funny thing is also, there's just a couple more here, but you're just going to see the same old, now of course this little guy showed up, but wasn't really very attractive to me based on liquidity. And then later in the day, we did see a lot of these really small cap ones in the yellow start coming through here. But when we're talking about the big caps, everything was too stretched out, right? Now, I also have the exact opposite ticker for stocks that are hitting all-time lows that have no support. So it's just the opposite, right? But look at these guys, Zoes, Whoosh. It looks exactly the same as the other one. So we had stocks running up, we had stocks running down on the open, but no cohesive patterns, you know, in my world, right? Cody, another one, big rundown, but by the time we see it, we're like, yeah, I'm not into catching knives here, and I'm certainly not going to short this thing. So right off the bat, I'm noticing, okay, we got a wishy-washy compare count telling me just kind of hands off, anything goes. I'm pulling up all my typical bread and butter plays, whether they be short or long, everything's too stretched out. You know, at the same time, what am I noticing? All right, well, then I start to notice the hollies. And let's just quickly, let me make sure I'm not missing anything here. And then we'll just jump right into the hollies because they were also kind of confirming what I was saying.
Just to chime in there a little bit, Jamie,
Sure.
so Jamie is a discretionary trader, and I'm essentially algorithmic. You know, 99% of all trading that I do will be done by the Brokerage Plus bot. And I noticed the exact same thing from a strictly algorithmic perspective. So it's interesting to see where any strategy that I have that looks for any kind of momentum or trend continuation or volume mover or something like that, we're pretty much all losing money all day. And the revision to the mean type of strategies were the ones that were doing well. So it's just interesting to note that regardless of, you know, whether you're a robot trader, a discretionary trader, or, you know, looking long or looking short, the market is going to kind of dictate a lot of what you're going to see. So I think it was kind of across the board where these moves really couldn't get much momentum behind them. So the only option was to either fade if you've got some plays in your book that allow you to do that, or as Jamie was talking about, just sit out. You know, the market will be open again tomorrow.
Right, right, absolutely. And, you know, nice observation there, Michael, because, you know, it's basically the same thing, but from two different perspectives. But, you know, the end result is valid, right? For someone like me who's looking for these nice range breaks, they just weren't present today, right? But convergence to the mean, you know, hey, how many standard deviations was Cody down before it hit this little, you know, bounce area right here? And then look, you know, a lot of these patterns today, right? If you are this type of trader, well then your animal was in the forest all day, whereas mine, I showed up and I'm like, there's easy deer out here, but for some reason today, there's a lot of bears, so to speak,
Yep.
and no deer. You know, and that happens sometimes in the hunting world. The animal that you go to hunt, this isn't going to make an appearance. So you have no choice but to just pack it up, try again the next day, and, you know, simple as that. Now, let's talk about the hollies, because we can see Holly Grail, which after I saw what I just described to all of you, kind of shifty compare counts. All my patterns are not cohesive. I'm not seeing anything good. Matter of fact, the only one that was decent that came out of this one today, I believe, was MOH right here. Okay, so notice where the signal was that fired off right here, and I looked at just about every one of these in real time. We had the little bull flag here. We got the sideways movement, little encroachment above to new high, which triggered right here, and barely meeting in the minimum on the 3 times 1 minute volume. Of course, even if you went long here, general rule of thumb on these is use the prior 15-minute low, and these were back in 5-minute candles here. So if I go 5, 10, 15, not including the entry candle, that puts our stop loss right here, and boy, look how close it came, right down to the number. A penny more and it would have stopped out. Barely hung on, and then if you were fortunate enough to be in this one, MOH to present you with some pretty good alpha before it did just about what everything else was doing, and then regressed back down pretty much to the entry line before the day was out. Once again, no follow through. You get the first run, which this is probably the best one I saw all day for the types of things that I look for, but just one out of this guy today, and there's usually 2, 3, 4, half a dozen on any given day, even on some down days. But just kind of a strange day in general today. Don't really know how to put my finger on it, but we did have some pretty aggressive volume there. Now, also too, take a look at when Holly first got active here, about an hour into the market. So what I was about to say there before I digressed, Holly Grail. When I'm uncertain based on my other metrics that give me expectations, and I'm trying to pick which AI to watch for the day, well, I'm going to revert to the more conservative AI. That was my thinking today, which is Holly 1.0. Well, did I make the right decision? Not from an overall P&L standpoint, not really, not at all, because we see here Holly 2.0 stole the show today, up 2.08 as of the close on 21 trades. Whereas Holly Neo, the more aggressive, no big surprise to see her doing a little bit more trades and barely coming out on the positive side here. I think she gave a little bit back on power hour short, was doing a little bit better. But going back to the way I played things this morning, I'm like, okay, patience is a virtue. I don't really know what to do at this point, so I'm just going to wait. And then a little bird whispered in my ears like, hey, Jamie, why don't you go do that thing that you tell everybody else to do, which is go through and look at all the losers, because we can see here there were stop hits, right? So that's what I did. I started looking at the stop hits. Here's CNNE. What did it do? Hold on one second. This was a short, right? Short didn't work at all, right? As soon as you put the short on here, we had the little gravitation back up here. And I'm thinking to myself, well, not really one that looks very attractive to me. So I just kept looking through the ones. And then lo and behold, I stumbled onto NS, right? Probably about right here, right? Stop was here, and what I noticed today as well is not only were some of these things getting stopped out, but boy, they were going well below the stop price. So on this little guy right here, I'm like, okay, we not only got stopped out, but we moved well past it. Now we're starting to do the little sideways dance, all right? Where is this guy in its daily range? Well, at that point in time, it was nestling up against these levels here. Nothing, too concrete, but gave me enough confidence to go, okay, well, based on what it's doing here, I'm going to go ahead and take an entry. I'm going to use the low as my stop loss, just nice and easy. So I got long somewhere in this area right here, a little bit cheaper than 27 bucks, put my stop in, forgot about it, right? Was able to take a little bit of profit in this area right here, and I've even got a little piece of it that I'm holding overnight. That was pretty much the only trade I did today, because I just wasn't sure. There have been too many times in my past, whether it was 20 years ago, 10 years ago, or even a couple of times last month, where you push things before you know it, you've got 1,000 paper cuts, and you're like, well, you know what? I knew that I should have sat on my hands today, but I didn't. I had to keep trying, keep trying, keep trying. And now the rest of the week has to be spent making up what I stubbornly gave away today, right? So first and foremost, when the winds are blowing in a different direction and you just can't really wrap your hand around it or your head around it. So what did I have today? I had the compare count readings that were kind of flaky, had all my charts way stretched out. So, sometimes it's hard for us humans to do, but we just have to be patient, right? And if we only make one trade for the day, so be it, right? One small winning trade beats several small losers any day, every time. Then you keep your mentality where it's supposed to be, and you're like, all right, well, it wasn't easy. Matter of fact, it felt kind of weird while I was not pushing buttons. But in the end, whether it's one trade or 10 trades to get you to that number, doesn't really matter in the end, right? All that matters is how much we're up or down at the end of the day. So, that was my mentality today. And, this was the most pristine one that gave me enough confidence to think, okay, all we got to do is get back up to the stop loss. I've got a much better price than Holly. I like what it's doing on the daily. And, more importantly, in the end, it worked. So, looks like the questions panel is clear, so we're just going to keep on going here. Now, of course, on Holly 1.0 today, we got red on risk off, we got red on risk on, so it's no big surprise that when we go to risk on, we're not going to see a whole lot of risk on opportunity from Holly 1.0. So now let's just cruise back over to Holly 2.0 here. And a little bit different of a story here. Now, what I like about Holly 2.0 today is she didn't really overtrade. I guess Slippery Slope got a little bit active here, probably traded a little bit too much, but after it was all said and done on 6 trades, 7 cents down. So basically a flat there. Now, what was really interesting today, check out what I just did here. Sorted by risk on percentage wise, right? Look at these crazy numbers. And guess what? It was all on these lower priced stocks today. And not only did we have TIS, which, hey, doesn't matter if it's me, Michael, Steve, Andy, Sean, Dan, Brad, anybody that saw this entry signal today, I don't know, maybe you did just jump into it. But of course, when we see what it did, we're like, yeah, I don't know. I don't know if I want to get it up here. Sure does look like it expended a lot of energy, and that's a pretty big stop loss there on a small dollar stock. But in the end, did it work? Yes, it did. And when you see things like this, it's a great testament to the difference between the way that we humans perceive data and the way that a statistical system operates, because it just doesn't care, right? The event was met, Mighty Mouse fired. Yeah, sure, the stock had burned a lot of juice here, but in the end, it worked, and it worked nicely to the tune of the biggest winner of the day if you held till the close here, which was 30% on a $1.81 stock, right? 55 cents on a $1.81 stock is quite a handsome percentage. So if you got into that one, if you trusted the statistics, more power to you. Now, I really like this because it jives with what I was saying earlier about my expectations. There's going to be some good trades. There's going to be some shorts. There's going to be some longs. Some of them will continue. Some of them will not. Now, it just so happens that TIS, low dollar and continued. But, and the whole time I was seeing these, I'm like, well, is the IWM busting out or something up here? No, it's still well below its yearly highs or all-time highs. This was just what was triggering today. Let's look at the little short here. Depending on where you trade, hopefully, if you did take a stab at this short, you were able to get filled and it wasn't on the hard to borrow list. But a nice little entry here. Of course, it didn't play nice, right? It almost got us out, right? As soon as we put the trade on, 5-10 minutes later, boom, running like it's going to stop us out, but did not in the end. That's what the hard stops are for. and then we got the rollover here, and a nice little down move, bounce all the way back up to the entry line, and then lower on the close. But from a kind of a, day where there wasn't a lot of game in the forest between TIS and ABIL, you get a long, you get a nice short, and then we got one more nice little short here, nice little long trade here on a stock that doesn't usually move a whole lot, but today it did, all right? And look at the daily, all right? No wonder it got so much action today because, boy, this thing, it's approaching the abyss, right? When we look to the left, no support. Was today just a knee-jerk reaction? Will it actually get back into the safety zone up here? Don't know. But something tells me that BW is going to be in play tomorrow as well. We will have to see. So on this guy today, we do have some decent examples of going risk on the trade when Holly closes it out, going risk off. So let's just take a look at TIS real quick here. So what do we have here? We have risk on. We have 16 cents is the hard risk off profit that Holly banked. Now we can see here at the close, up 55 cents. Why did she exit the trade? Profit save, which is her option to close a winner before the timed exit triggers. Now, we did get a nice little push here, even though this was pretty extended here. And then the shaded area here, you can see this is corresponding with the time that Holly spent in the trade in risk off mode. So we get it here, she gets out right here. Why did she get out? We got the run up, we got it down, and this was before she got out, but typically we'll see Holly exit on a profit save or a reduced risk when we get some flat line action here, or in this case, when we spiked significantly and took a little bit of a pullback here. So she went ahead and closed the trade out on the profit save, booked 16 cents. But right after that exit, if we were patient and decided, you know what, just taking a little pullback here, whether we decided to go the 50-50 method, which is always the one that I would recommend when you're trying to get used to this process, is if you think there's more left in the trade and you see Holly exiting, probably will behest you in the beginning to do a little bit of both. Go ahead and plug out of half your position with Holly, then take that second lot, set the stop loss back to break even. That's the one thing that I like to do, simply because it ensures that we bank that winning trade. If we stick to our hard stop, if we book the profit on the first lot, stick to our hard stop, then there's a chance it could go back down, stop us out, zeroing out what we made on the first lot, or even taking us into a slight negative situation there. So I like to ensure that the trade is winning. We book the profit, we set the stop loss to break even. This one got close, but would not have gotten you out. You would have stayed in, you would have gotten to enjoy that second run there and made more money than Holly did on the first lot. So 55 cents at the close, what do we got there? 39 cents of risk off, risk on spread there. Of course, we know we're not going to get it all the time, get the top, very rarely. But even if we tacked on an extra dime, 20 cents, 30 cents, anything in between that spread, then we're winning. We're winning the game called risk off, risk on spread capture, right? We're just looking to get a little bit more than what Holly made. Of course, the more the better. Some are better than others. But in this case, we would have stayed in. We would not have gotten stopped out. But on ones where we do get stopped out, that's okay too, because we're taking additional risk in hopes of making more. We get stopped out on the second lot for a zero or a few penny loser. We're still locking in the profit on that first lot there. All right.
That's actually kind of interesting to note, Jamie, with that's how I personally, and I think I say this every time you guys invite me on, but that's how I love to trade Holly myself. So if we look at ABIL again, I actually took that trade today, but not when Holly initially recommended it.
Was it somewhere up here?
The second spike through, so 8:30ish your time. What I like to do is I sort my
The
strategy.
second. Okay, all right.
Yeah, so I sort my strategy trades by risk on profit, and I actually look for the ones that are hanging out around their entry point. And
Right.
what happens often is that you get this second move, and you actually have a little bit more data on where to put your stop. So I was able to put my stop just a couple cents lower than the initial trade, and actually able just to capture it. It's You're going to miss a lot when you do this, and that's something that I caveat that I always tell, because that drives a lot of people crazy. But for me, I always like to see a initial pop through, and if we gravitate around that entry level that Holly was looking at, it kind of confirms to me that it's a technically significant level as well as
Mm-hmm.
a
Mm-hmm.
statistically significant one. So sometimes I always just call it a second mouse play, where they talk about the second mouse is the one that
Uh-huh.
gets the
Uh-huh.
cheese.
Yeah.
And I've done that myself, and it basically it helps with a lot of problems that I have with trading, which is has to do with chasing. So if you find yourself in the same situation where you're always chasing Holly, or you're a little bit slower to bring up and take the trade than you would like, it might be something that you want to look at, is just what's trying to take that second run at it, and can I lower my risk by waiting for that second run instead of the initial one.
Yes, absolutely true. And the second mouse often does get the cheese sometimes. I mean, how many times have I been in a trade in my whole career? And a lot of these, you know, pop up from, I don't know, many, many years ago before I became the chart reader that I am today. And Lord knows I'm not the best chart reader. But, I'm pretty comfortable reading charts and just looking at things and being able to immediately size them up. Now, when Dan and I first entered the game, it was a whole different game. It was more about the order book. But even then, it was uncanny how many times we got into something, got stopped out, but we didn't really understand the mechanics. We didn't really understand what was going on behind the curtain here. So back to your point, Michael, these patterns, whether it's this one, I'm sure there were 500 other iterations of this similar pattern today out there. But when you notice a good, or I won't even say good, when you notice a entry signal from Holly, the statistical, system here, and then the chart is making sense to us, and we see Holly hugging the entry line. A lot of times we'll see them consolidate right on top of this entry line, right? And pass back and forth through it maybe 5, 6, 7 times. But you're right. We know that the pattern is conducive. We like what's going on, but then we have the added benefit of the statistical probability on top of it. And that really is the defining factor here, because people like patterns all the time, every day without fail. I mean, lots of traders liking lots of intraday patterns out there, but how many of them are going, ooh, the pattern's intact? Oh, by the way, I also have 63% statistical probability behind this. That really is the missing factor in a lot of pattern uh, traders. And when I say pattern traders, I mean people that look for a specific pattern, not to be confused with pattern day trader or anything like that. But when you can add statistical probability on top of that pattern, it's huge. It's a huge thing. And that's what we're doing here, right? So yeah, good point, Michael. All right, let's just take a look at the time here. I want to make sure we have time to get through everything. Now, if there are new people out there, I like to do this from time to time. I just want to take a minute and, of course, you can't really see all the fine details here, but the chart up here is original Holly, Holly 1.0. We've got Holly 2.0 down here, and we've got Holly Neo here, because we've recently been given the ability to, individually chart these things and list out their performance accordingly. One thing to point out, lots of green here. And each one of these represents a day. Holly 1.0 continues to widen the gap. 2.0 widening the gap. Holly Neo maintaining the large gap as well. You might see a little bit more red just in the snapshot of the past. I don't even know how many days I have here, but keep in mind, Neo is the more aggressive of the trio, so you'll see bigger red days there, but you'll also see some quite handsome green days as well. So just imprint this in your memory. Holly 1.0 is the more conservative of the three, where Neo is going to be the more aggressive, and Holly 2.0 is going to be somewhere kind of right in the middle. But just want everybody to know the statistics are still holding up. There will be red days from time to time. Of course, we weren't even technically red today. I thought we were going to finish red, but she managed to be up a little over 90 cents today as far as the cumulative trades go. All right. Okay, Chris. So, Michael, looks like you answered the question there, but I'll just reiterate one more time here. Chris, risk off is just Holly exiting the trade, abiding by her rule set. Stop loss, profit target was hit, timed hold was hit, or she decided to pull the plug prematurely on a reduced risk or a profit save, whereas risk on is just showing us what the position is up or down if you never closed it out. And of course, this is going to fluctuate through the day, and they become static here at the close. All right, so I think that's just about it for Holly today. I mean, we could take a look at Neo real quick here. Might as well, why not? Definitely the more trades in Neo today. Not a whole lot of risk on, risk off. We are going to have a little bit of duplication through some of the strategies here. You know, this looks like it balances out. Not any huge losers on the day. Stop hits doing their job. And not terrible losers today. Just kind of evening out the equation here as Holly Neo was pretty much flat. Now, speaking of Holly, I want to talk about this next topic here. I lost my place here. There we go. Okay, so we've talked about Holly, risk on versus risk off. Talked about how there were a lot of huge winners on a percentage basis from the smaller stocks today. And then don't forget your Holly homework. What is Holly homework, right? Well, that is taking all the Holly modules or segments, if you will, and going through them at the end of the day. And what I like to do is use the all trades plotter just so I can get them all queued up here, and then just start looking at the daily charts here and picking out the ones that appeal to your trading style. And of course, everybody's different. You know, I like very tight charts that are typically bopping around at the all-time highs. I like to play those range breaks up there. Not as many of those today. But what I have done is I've went through all of the Holly trades today and picked out what I felt were some of my favorite ones. So let's see, how many did I get today? 1, 2, 3, 4, 5, 6, 7, 8. So I'm going to share these 8 alerts with you guys because depending on what the market does, hey, some of these guys might turn out to be pretty good movers. So got a couple of shorts in there, mostly longs, and then a couple of the longs are actually pullback trades, you know, because a lot of these things are, you know, they're 2 and 3 and 4 points away from their highs. So, you know, not exactly the most timely alerts. So instead of, you know, waiting for the run back up to the highs, if that ever happens, some of these might be good on some pullbacks. So what I'm going to do here is I'm going to copy all these guys and I'm going to drop them into the chat area. Let's see here. There we go. Copy. And that's what we call the Holly homework. So as you move forward, don't forget to do your homework because these guys can produce some pretty good gains from time to time. All right, I'm trying to paste into my chat window here, but I'm getting some grief. Let me just do a little test message here. Okay, it's letting me test. Well, that's really odd. When I try to paste my link in, I'm getting a white screen. Bear with me, ladies and gents. Share 8 selected price alerts, copy. I think that was user error there. Okay. All All right, Michael. I'm having technical difficulties here, so I tell you what.
Do
Let
you want to send
me
it over to me and I'll
let me
take a look at
slack
it?
it over to you, and you see if you can post it into the chat area, because when I try to do it, it's just giving me a bell and won't let me right click and paste. And if I control V, it won't do it either. Wait, there it goes. Okay. Why it worked that time, I do not know. All right. So price alerts should be retrievable now as a cloud link in the chat area. Don't mind me spelling alerts, layerts. Looks like a name from the old days, Laertes. But that should say alerts. My fingers got ahead of my brain there. Okay, so everybody should have those price alerts now. If anybody wants to give me a little shout, let me know that indeed that cloud link did transfer over and you can load them up. All right, Waleed, good deal. All right, let's see if I'm forgetting anything today. Nope. We just had the one MOH for my, typical bread and butter windows with the high volume alerts. I think we got just about everything covered today, and I think we did it just in the nick of time. Got about 4 minutes here left. So, Michael, anything to add before we let all these good folks get back to their day?
Nothing really to add. Thanks for having me out. I always like stopping by and chatting with the community here.
Absolutely, and we're always very pumped to have you, Michael. We'll have to get you back on here another day and let you, give everybody a little tour into maybe a little bit about how the sausage is made when you're in your crypto lab, or not crypto lab, but when you're in your strategy development lab, because that's always one of the more popular topics that people like to hear about. But of course, we can't give away too many secrets. But crypto on the brain, I guess, because everybody's all the message boards, Twitter, everybody's going crazy right now because a little bit of bloodletting in crypto land, but BTC seems to be holding up while all the other altcoins go back to the depths from which they came. So ongoing, we'll see what happens there. The action never stops, but it does seem to be that the majority of the action, the important action, is kind of adheres to the U.S. equity markets. Sometimes we have some weekend sell-offs, but lots of interesting things to keep our eyes on between the stock world and the crypto market moving forward. So tomorrow should be pretty interesting, Michael. We'll see what happens.
I think so, yeah.
All right, Scott. Well, if you're ready to walk us out of here, we're ready for you.
Sure, thank you. Yeah, a couple items on the way out. Everyone should make sure that they're subscribed to the podcast. If you listen to podcasts, just search for the Trade Ideas Podcast in whatever app you use to listen to podcasts in, and then make sure you're subscribed. You get the last episode, and then you're ready to get the newest ones that come out on Fridays. We've got a discount code that's good this month, so go ahead and write that down. It's Heatwave, all caps. You can also use this to upgrade and save the same percent. It's 15% off your first month or year of Trade Ideas. Go ahead and take advantage of that. Whether you're signing up for a new subscription or upgrading. Any questions, just shoot us an email, info@trade-ideas.com, or go ahead and follow Jamie on Twitter at QuantBot. You can follow Steve Gomez at Today Trader. Michael Noss is Bonpara, Bonpara on Twitter. Thanks all. Follow us on Facebook and then share our stuff that we post with your friends. Thanks, Michael, for contributing today. Thank you, Jamie. We'll get the recording up later on tonight or tomorrow and shoot you an email tomorrow with a reminder of how to find it. Thanks, guys.
Very good. Thank you, Scott. Thank you, Michael. And thank you to all of you who pop in to hear what we have to say. We know you're busy and appreciate your attendance. So have a good rest of the evening, and we will see you tomorrow. Bye-bye.
Thanks for having me. Bye.